So one of the questions that we get asked the most is, why does my insurance premium go up? I've not made a claim, so why has my premium gone from £100 to £300? Insurance premiums are all put into a pot. We call it pooling of risk. And what that means is that you individually may not have a claim, but if the whole group of people have more claims than they have premium coming in, then insurance premiums will rise. That is a really important factor that we need to remember. Now, there are a number of factors that are increasing premiums and outside of that pooling of risk. And if I start to break them down between motor and home, motor insurance is really interesting. So we know there's inflation and we know there are Brexit costs. And what that is doing, that is adding to the cost of parts. It's adding to the speed of getting replacement cars because it's taking longer to get parts and cars coming into the UK. All of that is increasing the cost of motor insurance. Home insurance is slightly different. So what's happening in the home market? Well, I encourage people to look outside. The weather patterns are increasingly getting more disturbed. We're having more floods, we're having more storms. What that is doing is it's making the cost of claims larger. Insurance companies are losing more money, and as a result, that means they put up premiums to cover their costs. Trying to predict the future is really difficult in the market at the moment. We are seeing some green shoots of recovery, and we are seeing that as premiums are going up, insurance companies are starting to make a little bit more money. What that will do, we believe, is in about Q4, we might start to see premiums level off. One thing I can tell you is premiums generally don't drop very much in the motor and home markets. Now, everybody wants to look to reduce their premium where they can, and we certainly encourage people to really look and make sure they're not paying for insuring items that they don't need. One of the most common mistakes people make is when they do buildings insurance. So what they will do is they'll insure their property for the value that it would cost to sell the house, whereas actually insurance is based on the cost it would be to build the house should it be burned to the ground. And of course, you already have the land, so you wouldn't need to buy the land. So what we encourage people to do is look positively where they can save money. But conversely, one of the things we ask people not to do is to look to reduce sums insured on their properties when actually they're just doing it to try and save money, and it doesn't reflect the real value of that property. It's something that people make a mistake of. An example would be, I don't want to do £100,000 worth of contents, just insure me for £25,000 because that's all I'm going to claim for. Whereas in reality, that would mean a claim may not be paid in full.